Okay, hello everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Mike Boutros here with you guys this morning. We did just get the release of the US CPI numbers, largely in line with expectations. You did see a slight upward tick here in CPI year over year, but the headline core read came in right at 1.9%. Keeps things status quo, on pace. If the Fed is going to move on rates this December, this is neither going to dissuade them nor push them. It's kind of right in line with expectations. So that was a really big read today. If we had seen a lackluster read there or a stronger read there, really would lean the Fed in one way or the other here, right in line with expectations. Later on in the session here, during this print, we do get industrial production figures at 9:15, so we'll try to catch that. But a quick look at relative performance so far to start the session. Here's what we're looking at. So split decision here so far. You can see that bring this in for you a little bit. Swiss franc, biggest loser on the session. No one cares about Swissy. Kiwi, actually the Swiss franc made a big topside break. I'm saying that jokingly. Down 0.41%. Kiwi down 0.3. Euro, Aussie with an interesting gain of 0.35%. You saw the RBA minutes last night suggest that it was interesting because they basically had an upward outlook of economic projections, but they softened it by saying there is room, and specifically the word scope was used for further easing if necessary. So it left the door open, but Aussie rallied right on the print. Just goes to show you, price is price. So we'll definitely go over some of the Aussie pairs. Aussie Kiwi was something that we were watching last night. Took a little long side trade on that one. And obviously the highlighted setups on the intraday charts. Christopher, good morning. Gary, Eileen, Mario, great to see you guys in the room. As always, guys, feel free to throw out any questions or trade setups you are looking at. Let's jump right in. Here's what yesterday's intraday update looked like. I know I've been working with pairs that are a little bit more exotic. I'm not really crazy about the dollar crosses right now. I'm not going to lie to you. As far as my personal trading, I really haven't touched any of them for a while. I just don't like where the positioning is. I feel like the dollar has rallied too much for us to start getting on the long side and the shorts. So I've been focused mostly in the crosses, and while they do have a larger ATR, it gives a little bit more flexibility. So in these type of market conditions, specifically when you're seeing some of these markets where just contractionary volatility, some of the crosses can offer some nice setups. So we've been looking at Kiwi CAD, CAD Yen. I do like the dollar CAD possibly trying to turn over here. So a way of playing CAD strength perhaps by way of Kiwi or Yen, a little bit better of a setup for me. So before we jump into that real quick, here's your dollar index. Same levels, no change. The close that we made here on the high day, note that the high, we also made a high day exact high here on the 10th, but the high day close I'm working with is 12,204. Remember last week we were talking about 12,123 being the bullish invalidation level, i.e. support, and that's what we got. If you look at this trend line here off that May high, it actually caught the exact low, almost to the pip there. So pretty clean action, at least on the dollar index as it's concerned. Look for near-term resistance, basically just higher than where we closed or what we pushed in overnight trade, 12,204. A topside break there. You want to keep looking higher, looking for a tag and break of this trend line, which is basically just a mirror of the slope. And then you'd look for that median line, longer dated, and that 200% extension of the range break that takes you in 12,354. So look, on a pullback, as long as this thing holds 12,123, it's a constructive trade, and we want to treat it as such, which means dollar short positions on any of the crosses are counter trade, or counter trend rather. So we just want to make sure if we're doing any of that, that we're being a little bit more nimble, because we do recognize obviously this is a pretty big dollar breakout here. All right. So that's the dollar index. On the near term for the dollar index, you haven't seen any charts posted on that in a while. It's just there's really nothing to look at from my standpoint. If we do solidify another high here and start to push lower beyond the weekly open, then you might want to tack on a pitchfork, some extensions, and see what kind of levels you have. But as it stands right now, momentum is holding 40 support. We've seen multiple breaks above 60 this week. It's just from a technical standpoint, it's not really poised there for the short yet. So you want to be looking higher in the dollar. All right, so yesterday's piece initially highlighted the Kiwi CAD, which was on the radar charts the previous day. Here's what Kiwi CAD looks like on the daily chart. If you note from the intraday charts on the previous session, here's what Kiwi CAD looked like. Or there it is. Here's what it looked like to open up the week. We had it on the radar chart on Sunday. So 87.30, 87.40 was a big region of resistance, confluence with the upper median line parallel. We were looking lower against that for initial target at 86.26. We got that move, and right now we're just riding this parallel to the downside. From a target standpoint, below 86.26, the next target is 85.75, 85.70, which is a key 618, a nice pivot in price. And depending on where we are in time, you're just going to need to get through this median line, which we're kind of sitting on right now. Daily chart reflects the same exact thing. Keep in mind you have the 50-day moving average there, which may hold things up, but this is your first solidified 50 break since August, basically. And you saw what happened there. So we're still looking lower in in Kiwi CAD. Here's what the scalp looked like last night. I prefer to look at the scale charts, guys, when I'm actually trading. I put these here for your reference, just so if you're trading, you can have a quick look and see the targets much more clearly. But make sure you take a look always at the scale charts, because it gives you a little bit more of a grand scale of where we are in the trade. You might want to plan your scalps a little bit more according to what's going on in the bigger picture here. But that's 100% extension off the high, equals two equal legs down. Excuse me. It was the exact low that we caught there in November. It now also coincided with that 100% extension. We made it below it. We made it below it. And here's what it looks like now. I'll leave the zoomed out version for a sec. So here's what it looks like now. You kind of pushed a little bit below. You sat on that trend line for a while, rebounded higher. You did make it back through 86.26, but here we are back below. Momentum holding below 50. Look for the U.S. opening range here. It's a 25 pip ATR, so it's a nice average range scalp. Might offer some nice opportunities here, but still looking lower. If it does break the opening range high to the upside, we'll look for resistance, short entries back at the upper median line parallel. Okay, we're going to have to be a little bit more clever with the stops at that point. Wait for a high to be made and then thrust lower. If we break the lows, next on point target would have been or is 85.75, and that's the 618. And again, coincides with that median line as we get later into trade tomorrow morning. So it might dilly-dally here for a while. Kiwi data is light this week. As you head into the end of the week, you do have a lot of data coming out of Canada. You have CPI numbers as well as retail sales. So that's going to be the major event risk for this pair heading to the end of the week. Still looking lower at this point. We're just going to lower the bearish invalidation level to that upper median line parallel. I think we've seen enough tags of that structure, I think, at this point to validate that slope. Any questions on Kiwi CAD? All right. Moving right along. Next on tap was CAD Yen. And this is a nice combo heading into Friday because you get a double whammy. You get the release of Japan retail sales and CPI and Canadian retail sales and CPI. So both of those hit the wires on Friday. Obviously, Japan will come first. Want to keep that in mind. But the main play here was staring down this major resistance at 92.50, 92.48. And here's what it looked like last night. It was a messy break. I'm not going to lie. I was in and out of this. I got shaken out after we kind of dipped out tested it again and moved off, so I took a break-even stop. But look, sometimes the breaks will be clean and just easy to go. Sometimes they'll be a little bit more messy. Long story short, we came back, we tested former upper median line parallel as support, and we came back into that 618 target, which is still resistance right now. The only thing I can't get my head around is this thing can't get through 60 here, which, you know, the hallmarks of a false break is you try something like this, but you close the session well below that median line, and that would leave us right back where we started. So still having trouble validating the breakout. I do like the rebound off of, looking higher. Next topside objective is 92.79. And followed by that, you're looking at just the 93 handle. Major level of resistance is going to be right into 93.27, just above 93. That's a clean 618 extension off the low. But also, if you look back in price, guys, going back a few years, this is the daily chart. Huge pivot region. This entire region has caught so many lows, so many turns in price, and we're testing that right now. So we're going to want to see a real fruitful break here. If momentum clears 50 on the or 60 rather on the upside thrust, that's the validation for a broader turn here. Looks like it's been basing since that spill. But long story short, as long as we hold, this could be a nice near-term breakout, looking for a move back into that 92.80, 93 level. A little bit tighter of an ATR here, 21 pips. And CAD yen looks like this. Bear with me one moment, guys. All right, so CAD yen looks like this right now. Just kind of checking out the 1 minute chart, bringing it up, seeing if there's anything to work with. Doesn't look like we have any long triggers that are pending right now. The last one I would have worked with was something like this, maybe, to get you back in. Stay constructive above this. But if you were there for that European trigger, you're still holding longs. You want to take just a little bit off here near that 618, just in case you get failure and you pull back into the open of US trade. Don't necessarily like jumping in right here, but next target to the upside, if you're holding those, is 92.80, 92.79. This was big. As long as you stay above here, you got to stay constructive. 618 extension off the low, the initial opening range high, 50% retracement off the high, and that median line. So looking good here on CAD yen. Any questions on CAD yen from last night? All right. The radar charts highlighted pairs that we were looking at earlier in the week. And although I'm not really an advocate of necessarily scalping dollar yen right now, it is at a major level. I just want to highlight that as we head into deeper in the week here. Dollar yen looks like this. And the major key resistance, 123.42 into 123.54. Looks like this on, well, let me just bring up the daily first. Okay, that's exactly where the high was in overnight trade. We spiked up as high as 123.41. The 100% extension is at 123.41. So, well, if you round up 42, but allow me a pip. Here's what it looks like, or let me show you what it looked like last night. So here's that move. It's just a major key confluence region. Again, I tell you all the time that I love these retracement extension overlaps, and specifically when you get of the same broader move and overlap of a retracement from the decline and extension off the low, those tend to be nice reversals. You saw it here on the pullback that we made earlier in the month. You saw it here right now in the resistance range that we just ran into. The long bias is at risk immediately while below this region. So you might get some pullback from it. Not really, again, interested in shorting the dollar per se, but trade remains constructive above this just basic trendline support, which we've tagged 3 times now. In fact, adding more conviction to the trendline support is the fact that the gap gapped right into it. Essentially, that's where the market found a bid on it. So, look for a pullback back into trendline support to possibly get back on the long side. A break above here. One thing I wanted to highlight in yesterday's radar chart was this basic trendline support off the lows from January. He tagged it again in April, May, almost in July. Break, it was instant resistance in August. It confluenced that major key region we reversed off of earlier this month, and that's going to be just higher, okay, around 2370, let's call it. So initial resistance, look for a break of that level, and then the major key region, 124.13, 124.36. I know the swing side, Jamie's looking at 124.40. So we're all looking at the same broader region right here on a top side move for dollar yen. I mean, this thing's poised and coiled up for something. You got a momentum trigger here that's pending, so if you get a downside break, look for that correction to give us a little bit more of a stern move towards that slope support. Remains constructive above last week's low, essentially, which is 22.44. So nice moves. I haven't been able to clear out any levels. Trust, I played with this for a while yesterday to try to come up with some near-term levels that we could possibly look to scalp. Price action just hasn't been that clean. You have a channel yesterday, or last week, excuse me, that played out perfectly. Even if you're scalping this, guys, the range is so tight. For me to get really involved with an 18 pip ATR, better be something special. And I don't see it here. So I don't want to deter you. If you guys see a trigger and it's there, by all means, just keep in mind that you're at some pretty critical levels here for the dollar yen. And if you see that break, it's likely to be another launch to the upside, just like we talked about here a couple of weeks ago. This was a huge break. And even on the open of the week, nice wide range. Christopher says, Mike, if you have a moment, can you explain your view on when a level is broken? For example, a dollar yen closed below the 618 in the 30-minute retracement but rallied. Do you look at a specific time frame to conclude if a level is broken? Well, let me premise the response, Chris, by saying the daily closes are really what constitute a break or not. So for me, a lot of people question, well, why do you go through all the work of making tons of charts, one for the daily, one for the 30-minute on every pair? It's just my way of thinking and staying disciplined. And this is really what validates the break of support or not. Is a close above or below. Dollar yen is probably the worst example to show you this on, but because it's notorious for that kind of stuff. But it's really about the closes that'll validate a break of trendline support or not. Having said that, I'm going to throw a question at you, Chris. Are you asking because you're trying to take – let me backtrack. These levels, when we're playing them, right, these are targets. If you're looking to play a break of resistance, those are your lowest probability scalps. Again, those are going to always be your lowest probability scalps. And whenever I get that question, it's usually because someone's trying to take a long on a breakout or to take a short on a breakdown. Those are going to be your worst entries. Why? Obviously, because you don't have an ideal entry on the swing, and B, because now your stop is going to have to be further away. 9 times out of 10, you're not going to be able to respect the quarterly ATR if you're taking a break of resistance or a break of support. You're always going to be better selling into resistance, buying into support, always. So if this breaks, and obviously I'm not going to try to take the breakout. On the pullback, I'll look to see if it holds and see if we get a low, and then that will give me a better entry to take the short. Or excuse me, to take the long on a swing low or something. If it breaks to the downside, same thing. I'll wait for that pullback to give me a stop to take against or a better position, see if it holds that level we just broke, and then look for the downside. That's really what I'm looking for more than has it spent 30 minutes, has it spent X amount of time above or below. I think the retracement you're talking about is the 618. I'm going to bring that up to show as an example. I think this is what is this what you're noting? I traded dollar yen several times last week successfully, but didn't take the most recent long setup because of the break of the 618. You're talking about this break and the breakdown, Chris? Just want to make sure we're on the same page. So again, on a move like this, we want to make sure that we keep in mind the broader trend. It sounds like you're following price action a little too closely. So remember, we have a bias, right? The bias is either to the long side or to the downside. If we're playing a range, well, it doesn't really matter because you're coming into resistance, you're looking to sell that period. You're coming into support, you're looking to buy that period. But we're long, so our bias has been constructive on this since the break. So you're basically looking for a pullback to get long. Instead of trying to play the counter trend, it's always going to be in our best interest to stick with the trend. He says, no, there's another retracement from the 11.5 to the highs. Let's take a look. This retracement? Not sure why you'd be taking it from midweek like that. If anything, you'd be looking at the broader move from here or the secondary move from here is what I'd be looking for retracements on the downside. 2153 high. In any event, yeah, I see what you're saying there, Chris. In any event, does that offer some clarity on it? I want to make sure we're on the same page. I think I'm having a little trouble getting your question um, sort of around my head. I'm not really sure what you're looking for. You're looking for how do we know, or what's your view on a level is broken? Did that answer your question, Chris? I want to make sure we're on the same page before we move off. You're looking for a validation in price action. Remember, price is the only thing that's going to give you the tell. And the best tell is a break, check back as support, and move off. Now, you got to recognize the pairs that are very notorious for giving you a lot of whipsaw action. Dollar, yen, sterling. Sterling's notorious and known to be an institutionally traded pair. You get a lot of breaks of resistance and pullbacks. Here's an example of something that looked like it was just going to go right through the roof. And then we saw a massive reversal close lower on the day. That's a reversal pattern you want to recognize. So look for the closes, look for price action to break and retest. That's your best tell. All right, Chris, as we go through this, stop me somewhere real quick if there's an example that you want me to go through. Michael, how do you use the trend lines on RSI2 to identify buying or selling entries? If that's off topic, could you respond to me via email? Jency, you're in the right place. So we'll go over a quick recap real quick. When you're looking for RSI, there's really nothing special about RSI2. All it adds is the 1640 levels and auto scales it for you. So it's a nice, helpful tool. You can find that on fxcodebase.com. Momentum in general and all oscillators are backwards looking, so I don't want to ever stress that more than price action. But it can be a tell on a trigger on when we want to actually initiate the trade. So if we're looking for a trade at support, and I want to move off dollar yen because again, I haven't really set up a near-term setup for dollar yen. We were just using this as an example. Watch that major key resistance at 123.40, 123.53. But when we're looking, let's go over the next scalp setup and we'll talk through that one. Aussie key was the first one from last night. We've been following this from last week, guys. If you guys remember, a huge breakout. A couple of weeks since the start of November. Yes, last week, midweek, we saw the continuation of the uptrend. This week, we gapped right into a major support confluence, 38.2 retracement, upper median line parallel, now support. You saw that breakthrough, and here we are at the 618 extension last night, 109, 65. Here's what Aussie key looks like now. And we'll go over some examples, Jency, on some RSI sort of triggers. So the resistance, again, 109.10, 109.20, we were talking about that in the webinar here on Daily FX. And That was the level we needed to clear. Initial targets were the upper median line parallel. Well, now we're approaching this huge confluence region. You have the 100-day moving average, the 618 retracement of the decline, and more importantly, those darn slope lines, which have been guiding price action since the 2014 January low and have called every turn in price, is right back there. Again, that's the original slope. So coming into a bigger region of resistance here for the Aussie key. Here's what it looks like on the intraday. And here you can look at some of the triggers that we've actually taken and used in price. So the important thing that I always want to stress, Jency, is that RSI is not giving you your bias, nor is it dictating the broader picture. All you're looking for is to trigger the near-term price action you're looking to take advantage of. So if we're constructive on the trade or we're bullish, we're looking for long triggers. If we're bearish on the trade, we're looking for short triggers. Now, I'll draw them on both sides because if I'm bullish and a bearish trigger gives out, I kind of want to make sure I'm aware of that, maybe reduce my position, maybe not go in as heavy, maybe take a step back and look at what the near-term picture is saying. If I'm holding a trade and I've already scaled out of it, a lot of times if a trigger gives out on the other side, that'll be my cue to get the rest of the trade off. So I'll draw them on both sides, but we're only looking to take action on the ones that are in favor of our directional bias. So yesterday we were talking about this resistance. The risk was for a little bit of a pullback against it, but we're looking for long triggers, right? The momentum signature looks constructive on the 30-minute. We bring it into a 5-minute chart. Aussie key, Aussie key, Aussie key. So here's what Aussie key looks like on the 5-minute chart. So we're looking for long triggers, right? As this thing is coming into resistance here. I don't know if this is going to hold around 109.66, 109.65, right around here, right? So on this trade, you saw it come, pull back, okay? You couldn't really find any momentum to the downside. You got back above 40. Let's see what trigger we'd want to use. You're typically better off always using the trigger off the high. This would have been the 5-minute trigger that would have looked to try to keep us into the trade. Now, that's not something I would have necessarily worked with on a normal basis, but what's the stop? It's very simple. It's the opening range low. So your opening range low for Sydney is like 109.19. You get the trigger at like 109.53, 30 pips, 28 pips to scalp, probably wouldn't have taken it. For the opening range of Tokyo, if I wanted to choke it up, take a little bit more of a conservative approach, your stop would have against the Tokyo low, 109.40, looking for a long trade of about 28 pips. You'd be out by now. So does that make sense? Let's say I took that trade to the long side. Now I'm long in the trade. 28 pips capped me, and I took off half the trade. And I want to know where to get out. I'll go ahead and strap on a retracement, or excuse me, a support trigger. When that support trigger breaks, if it breaks, that'll usually pull me out of the rest of the trade. Now on this one, it would have been a false break because it did continue higher. Those are going to happen. You just got to be watching near-term price action. And this is a 5-minute chart. Sometimes I'm bringing into a 1-minute to get a little bit better of an entry. Actually, it looks like you might have had an entry here even earlier in US trade. Something like this. The basic rules apply to basic trendline resistance and support. So a break of the trigger, come back, it tests and holds a support, move higher. That's the validation for a near-term reversal in price. Other things we look at, Gen C, real quick, is that usually in really strong uptrends, you want to find support at 40. Usually in strong downtrends, you want to find resistance at 60. And these are just things that you can use in the momentum oscillator to give you a little bit more or clear picture of what the momentum profile looks like. All right, gents, it's a quick breakdown. Thanks for everyone's patience in the room. It's always good to recap some of the basics here as we go through. Chris says, if price closes below retracement of an extension, I'm trading intraday. One would I consider the level broken? I understand what you mean about the daily close, but it doesn't help for the intraday. That's a personal note, though. He says, no worries, Mike. No, no worries, man. A lot of people, he says, thank you so much for addressing it. A lot of people probably have the same exact question. So, Chris, I'm looking at price action. If you look at all the commercials for SB, guys, it's the most thing that we stress. So I'm looking for price to react. I'm looking for price to break that resistance level, come back, and I want to see it hold as support. I want to see it hold as support. Um, my question to you is you should already either be in the trade, okay, or be looking to get out of a trade when you're approaching these positions. That's why, Chris, I don't run into that problem a lot because I'm not trying to do something on the break. I'm either closing out a trade, right, or getting out of a trade that is a loser because it's breaking a key level. If that's the case, the stop is there. As soon as it gets there, it's going to take me out, so it doesn't really matter. Um, if I'm in the trade and I've scaled out a little bit on it already, and the trade looks like it's breaking, and I want to know if I should be holding it or if I should look to if it's going to be a false break, look at near-term price action. It's the best thing I can tell you. And look at the momentum signature. If you're getting some divergence into the highs and you see that price action is breaking down or resistance is continuing to hold into the following hour, that can be a tell. Chris, also the opening ranges for the hours can be telling. So the first 10, 15 minutes of every hour will oftentimes give you the opening range for that hour time span. So if the opening range breaks to the upside, look to close that hour near the highs, look to set a high near the close of the hour, and vice versa. Oh, John, did you ask that before I just said that or after? John's asking, hi, Mike, do you use a 1 hour opening range? Wow, that's some telekinesis there, or telepathy rather, John. Yes, yeah. A lot of times I'll use an opening range for entries. For entries. Chris says, got it. Thank you. We'll try the 1 hour opening range technique. Cheers, Chris. And you'll find what works, man. Again, a lot of it's honestly just staring at the price action and seeing how it's reacting against that break. But make sure you're not trying to, buy the breakouts and sell the breakdowns. I want to make sure that we're not advocating that kind of behavior. John says, great, thanks, Mike. My pleasure, my man, anytime. All right, back on topic. Nice little segue there, but Aussie key. So the broader picture for this thing is, pretty outstanding. Like I said, I do think you're coming into a nice support region here with this confluence, three-way confluence, if you, if you will. But the picture still looks pretty strong for Aussie key. One thing I also do want to note is that level that we broke last night, the 109.65 level that was highlighted, that's a 618 extension. Okay, that capped the initial opening range high for the week. The 100 takes you up into 111.13. Okay, there's a soft target there at 110.66. But you'd look to stay constructive on this trade at this point. We can choke up that bullish invalidation level to that 109.20 level. And that 109.20 level here on the 30-minute coincides with this key region of support. Now resistance turns support again. So I like it. I like it. It's a good way, again, of playing short Kiwi dollar or short Kiwi without having to get involved with the US dollar and riding some of this Aussie strength that we've been seeing. So look for a pullback against 110.21. Might actually offer some nice near-term scalps on the short side if momentum holds 60 on a daily close here. But largely speaking, you'd be looking to buy pullbacks here in Aussie Key. Any questions on this trade? In fact, on this one, you even had a trigger on the downside for that break we had just recently. I'm not going to lie. I was actually looking for short exposure here last night. I was looking for a short trigger as we came back into this region of resistance. You saw that momentum was kind of teetering out and giving you some divergence into that high. You didn't really get it. You got a short trade. I'm glad I wasn't awake to see this because I probably would have taken that short. You had a really tight stop and that trigger break, but the market just completely quickly reversed, which is why it's very important, guys, to be mindful of where you are in time. Okay, on that pull and test of that resistance, the opening range for Tokyo and Sydney was just taking place. So just keep that in mind. Actually didn't get much of an opening range break last night. Chris says I was looking for a short there also. Yeah. Yeah, it's a good thing I didn't, see that trigger because like I said, I probably definitely would have taken it. But I guess people didn't really take that RBA minutes as too heavy for the Aussie. Last but not least is Sterling Key, another interesting pair. Here's what Sterling Key looked like. And the major thing that we just wanted to highlight here was a key resistance level that we're coming into. I'm not a huge advocate of getting long Kiwi, but with the sterling outlook that we have, things should be turning pretty heavy from the seasonality approach this week, and you're coming into a nice confluence region of the 100-day moving average, the 50% retracement, and a long-dated median line off the lows here, all wrapped up right in this region. So looking for a possible turn, I don't know on these kinds of plays, which is why this is on the radar chart, is you want to look for the initial hallmarks of a reversal off resistance. So either an emotional spike high somewhere in the session on the opening range. If we break through, all bets are off. You like to play these trades into the bearish invalidation level, and that's what this would be. You'd look for a move right back up into, 237.70, the 618 off the decline. And that coincides with basic channel resistance tomorrow, basically. Near-term support is going to be at this pivot level right here, the July lows. And that comes in right around 130.155. So keep your eye on Sterling Key today. I think this is going to be a sneaker here. It's going to buck everyone's expectations. Well, that actually, that might have been it. Wow. Probably should have gone a little faster through some of those setups. It's a 3-point trigger touch. Stop against 35.37. You're looking for about Sterling Key. Look at about 67 pips per scalp. It's a nice wide range scalp. So look for the U.S. opening range. Look for some sort of reaction off this. Keep in mind, again, you're in a strong uptrend, so this is counter trend trading if we take a short off this, right? Until we get a shift, a broader turn in momentum, and a break of the weekly open, you're trading counter trend. And that's why we always want to be mindful of it. So your initial position size will typically, you want to keep that a little smaller, a portion of X, whatever your normal X trading volume is. And with the same respect, I'm much quicker to take half the trade off, bring stops to break even. Take the half the trade off, bring the stops to break even. So we'll see. But this is a big level on the daily chart coming into this region here at 135.10, 135.12, 125.13. Any questions on Sterling Key? That's Aussie Key we got through, dollar yen we got through, dollar CAD we got through. Oh, we didn't go dollar CAD. Quick look at dollar CAD because we've been covering some of these CAD crosses and a possible CAD strength trade. Here's what dollar CAD looks like on the daily. Again, I'm not going to be able to get comfortable advocating any type of short exposure here until we get a turn. I got caught a couple of times on this late last month on this pullback here. And I'm just not ready to start trying to fight the uptrend again just yet. It is hovering on this 133 level, and what you see there in magenta is the reversal day close that we made here subsequent to the high. We're kind of just right there. We did close above it. Today we're pushing back, kind of just straddling it. So I don't really feel very comfortable scalping dollar CAD. If you look at this, even on the near term, while it is holding the structure really clean, since the start of the week, you're essentially doing nothing. You're right at the weekly open. So waiting for a little bit more clarity here on dollar CAD. Dollar breakout is legit, so as long as that's the play as well, I don't really want to try to fight it until I get some a little bit more technical factors turning over for me. Christian Patel wants to look at gold, please. Absolutely. Making a lot of headlines these days. Any questions on dollar CAD? I mean, not only that, but you can see the ranges have been contracting. This was giving us like 29 pips last week, 30 pips. Now it's down to 23. Price actions, yeah, you know. So it's just not on the menu right now. Here's what gold looks like. Oh, Chintan. I'm sorry, not Christian. Here's what gold looks like. So by our standards, okay, we did have one update. Last week we were looking at this, and if you bring up the consecutive bars indicator, which is another add-on you can get from MarketScope, guys, tells you how many consecutive up or how many consecutive down days we've seen for the asset. If you look here, we completed 8 days down or 7 days down, 8 straight days, 7 consecutive days. It doesn't count the first day. After that outside day reversal that we made late in October. You had one up day, and now we've had another 5-day decline, which just to say that's closing lower on each session. Here's the last time we had a 5-day decline. That was obviously the major August or July 7th sell-off there in gold. But my point being is you're reaching an exhaustion point where there's really nothing to do if you're not already in the trade, Chintan. It's too soon to buy, and it's too late to sell. In fact, if you read my piece on daily effects from the weekend forecast that we publish every week, I write the one on gold every week, Chintan, and that's exactly what I kind of noted in that as well. Jamie had that as one of his titles actually last week. It's just there's nothing you can do here. Maybe be interested in finding a little bit more of a basing towards 1067. This is huge, 100% extension off the high. If you go way back in price action, you can see that pivot in price right there. 1067, maybe start to look for a turn. If it rallies back into the median line or the longer scope median line, maybe look for a sell. But from right here, it's just nothing I'd be interested in doing. Momentum even has just continued to flatline, but it's not even giving you divergence, right? So I'd expect this thing to dribble down a little bit lower. Eventually, there's going to be some sort of blow off that'll send this thing running real quick, but even that you'd look to sell at this point. All right. Chintan says, okay, sir, thanks for the advice. Anytime, Chintan. Trust me, I've been watching it too. I know a lot of people have had their eyes on a lot of these commodities which are just getting massacred. I mean, look at copper. I don't know if you guys have been watching all of them, but where's my copper chart? There it is. This thing's, every time you try to give it some structure, it just continually just breaks down. Now, a little bit of a different play. If you take some of the slope lines we've been following, this is just a mirror of the slope and extended off the lows that you made from January. You can see that that's, catching the lows there. You had that median line, lower median line parallel. I know we've kind of straddled this before, but on a closed basis, if you look at it, it actually has been some decent pivots, and we haven't closed below it. So both of these things are looking the same, right? Gold and copper coming into a pretty long stretch on the decline. Let's see how many days down we've had here. Industrial production in U.S. fell 0.2% in October. That says. Okay, industrial production numbers just came out, guys. So let's just take a quick look at that. Negative 0.2%, looking for a print of 0.1%, so slightly weaker than expected. No downward revisions just yet. Capacity utilization coming in at 77.5%, right along expectations. Slight upward revision there. So not seeing too much of a prominent reaction here on the dollar crosses. Oops. Sterling dollar is another one I've been watching. Is there any other questions on copper or gold before we move off, or any of the commodities? I just want to go over some of the sterling crosses as well. You did get UK CPI numbers, excuse me, looking like this earlier in the session. Pretty much in line with expectations across the board, slightly stronger than expected on the core year on year, which is going to be the more prominent of the prints. Certainly take pressure off the UK, and with all those people who are starting to call for normalization, you'll see those calls upped. So long story short, here's what sterling dollar looks like. First on the daily chart. And the levels here have been extremely clear. The only thing that sort of threw us off guard was this break that we saw earlier in the month. This is a huge region. You'd have expected to see the breakdown, and specifically because we closed below it, give us a little bit more of a move. Remember, major key resistance on the near term, 5260, 5270. You're looking at that major pivot, multi-year pivot. And you're also looking at the 50% retracement of the decline off the monthly highs. So that's what we reversed off of last week on Friday. And, I'd still be looking for short exposure into that region against 53.16, which is going to be a little bit more of a key resistance in my opinion. Here's what it looks like on the near-term chart. And it's just a basic pitchfork off the highs from October and the high that we made in early November. The median line right here is continue to offer resistance. If we rupture through this and take out the weekly opening range high, 52.60. And there's another trend line there that intersects that 618 heading into tomorrow's trade session. So an interesting region. I'm looking for shorts here into the open of US trade. If it doesn't give me a signal or if it doesn't give me a trigger, then we'll be looking for shorts higher up near 52.60. That's also last week's high. I wanted to publish this chart last night, but I just didn't have enough conviction on it, guys. So take a snapshot. Again, a quick reminder for everyone in the room. If you're newer here, and I do see a couple of new names, good to see you guys here. You can always take a quick snapshot of the charts that you see posted by clicking on the camera button in the top right-hand corner of your GoToWebinar window. But I mean, it's make or break, at 52.30 basically. If we take out the opening range high, look for another stretch higher into 52.60. I still am looking for short triggers. Momentum signature still looks bearish since the high we made late last week. Here's your break below 40. Here's your multiple turns ahead of 60. Another break sub 40, again turning ahead of 60. So as long as that condition continues to be as such, you'd be looking for short triggers. Here's what it looks like on the 5 minutes. I do want to keep that trigger there just to watch it. If that gives out, puts me on the sidelines, but it also will give me a trigger against this low. You always want to remember when you're taking support triggers, guys, you want the low here to be some sort of low in price. And remember always that the oscillator is always connected to the close. These wicks don't matter. So in fact, sometimes I always just bring it into a line chart, see where the low in price is. That's where you'd want to connect your trigger is. See where the high in price is. That's where you want to connect your triggers. So we will see if we can get an entry here. And again, another thing with sterling dollar is if we do want to get advantage of that sterling dollar short, take a look at that sterling key as a possible player as well. As Kiwi continues to drift at the lows, any type of relief rally there might give us a nice play on sterling key. Quick review of some of the trades that we covered in yesterday on the radar charts. Just wanted to highlight the sterling yen trade that we put out on the radar on Sunday. That's at the top side target at this point. Here's what that looked like. So on Sunday, oops. On Sunday, we highlighted this was coming into a big support right around 185.92 into 186. So the opening range was setting up right at that low. It was a nice confluence region of median line support and a huge Fibonacci confluence, excuse me. This is a 100% extension at 50 off the high. and you're basically looking for long triggers from there. We got that trigger early in the week right here, which is this one, which did give us a long side bias. The first three triggers have already been taken out, and this is now key resistance near term. You're looking at the highs for the month, which is the monthly opening range high. You're looking at the median line off the low. Right there. You've seen a lot of pivots off that region. So watch that near term, okay? Immediate risk is to the downside against this. Again, like I said, if sterling turns over and you see the sterling dollar give us some triggers, sterling key possibly give us some triggers. This one I'm not too crazy about because I'm not too crazy about getting long yen, but you could get a move to the downside against this region. Inevitably, you'd be looking to buy it because we're still in the upside slope, right? We're still within this confines of this structure. But near term, you could get some kickback off that region. A breach higher and you're looking for nice upside targets at 188.26. That's just a soft target. More importantly, you have a nice confluence region here of the 100 and 161.8 extensions, 188.53, 188.60. Christopher says, Mike, you said you were looking short into 52.60 on pound, right? Chris, if sterling breaks through resistance, yeah, I'd be looking for resistance there. I can't, again, our strategy for near-term trading, guys, is different from other strategies in that we don't want to just put entries on a position because it's not just important that price get there, but it's important that something happens there. We're watching near-term momentum. We want to see a trigger. We want to see some sort of near-term price action validate that that's going to hold. So it's always better off, Chris, to be looking to play the major trend. From our standpoint, we're still bearish on pound. So I'm looking for short exposure. If this breaks, I'd be looking for short triggers up at 52.60. So Chris, to answer your question, yes, but I can tell you that I'm looking for short triggers right here. If I don't get any and the thing opens the US markets by breaking this high, then that's the next level. I'd be starting to look for short triggers. Does that make sense, Chris? There's a difference. He says, yes, got it. Right on, man. Right on. All right. Are there any other questions before we wrap it up for this session? I do want to remind everyone, a quick reminder that tomorrow after the midweek strategy webinar with Jamie Setley, we'll also be having the IDO search webinar walkthrough. We're going to be a pleasure to have the guest on board, Mr. David Kedemy, who is one of the co-founders and creators of IDO search. So he'll be on the webinar as well to give us a little bit more information and background on that. But it should be a very interesting webinar. So I encourage all of you to mark your calendars tomorrow, right after the midweek strategy webinar at 2:30 Eastern. We'll do that platform walkthrough. We'll also archive that for sure if you can't make it. Yeah, Kyle, definitely, for sure. We're actually going to make that public. So there's been a lot of questions and interest on IDO search. Again, this is their first release into the retail markets, guys. This was only an institutional product before this. So we're really excited to have been involved with them. Okay, so I got about 6 minutes ahead of the open, guys. I'm going to go ahead and wrap things up here. I will see you tomorrow morning. As always, we'll give you an update later tonight on any updated scalps or setups we're looking at. Keep an eye on that dollar index. More importantly, on the sterling dollar and the sterling CAD are the ones I've really been focused on to start the session. Kiwi CAD, a little bit larger of ATR, and we'll also be looking to see if that resistance, or if that support rather, holds up into the open. Have a great session, guys. I'll see you tomorrow. Cheers.